Yeah, thank you, Ayo. And yes, God bless Nigeria. Hello and welcome. It's the midweek trading session right here in Lagos, Nigeria. Let's get you the top stories that set your agenda. It's a packed show. Well, let's start with our biggest foreign currency earner. That's oil now. We see the prices are down again, 0.7%. $75.54 a barrel. That's for Brent. Grades a big drop this morning. WTI crude, $71.24, but still holding above that $70 psychological level. Industry data showed U.S. crude inventories swelled more than expected, though declines were capped as the market watched diplomatic efforts in the Middle East after Israel continued attacks on Gaza and Lebanon. So we see it's geopolitics and demand expectations moving prices right there in the oil market. Let's get a check on the FX market now. We see the Naira depreciated by about 10 kobo to fix at 1,643 Naira to the dollar. That's during trade at NAFEM. Market participants sought U.S. dollars to meet their various obligations, leading to a high demand for the greenback. So we're seeing for NFEM, 3.02% down. And yeah, NAFEX window wasn't left out. Marginal decline of 0.01%. So it's the same story at this point. Volatility right there in the FX market, just like we have in the oil market. All right, to the annual meetings now. The International Monetary Fund has reduced its 2024 growth forecast for sub-Saharan Africa to 3.6%, down from 3.7% in July. However, there was a slight increase in its forecast for Nigeria's economic growth in 2025 to 3.2%, up from 3.0% in July reports. The figures which were shared at the World Economic Outlook was part of the meetings for the second day of the World Bank IMF annual meetings. Our business correspondent, Inijon Mekwa, reports.
The second day of the annual meetings of the IMF and World Bank at Washington, D.C. has been a really busy one. But the good thing is it started on a very good note as IMF forecasts that inflation, global inflation, may have peaked already, and so deceleration should be the trend. Now, there are also other conversations that concern sub-Saharan Africa and the G24. The reforms going on in the Bretton Woods institutions also made the topic for the day. The projection of the IMF shared at the World Economic Outlook is based on receding inflation numbers and brings it closer to central bank target, with growth projected to hold steady at 3.2% in 2024. The second day of the annual meetings of the IMF and World Bank at Washington, D.C. has been a really busy one. But the good thing is it started on a very good note as IMF forecasts that inflation, global inflation, may have peaked already, and so deceleration should be the trend. Now, there are also other conversations that concern sub-Saharan Africa and the G20.
All right, I apologize for that, for distortions there. We had some technical issues with that report, but we'll definitely bring it back for you another time. But we see trade relations between Nigeria and the United States is now worth about $10 billion per year. And that's according to the U.S. Consul General in Nigeria, Mr. Will Stevens. He made this known in a workshop in Lagos, focused on the African Growth and Opportunity Act, that's AGOA, and Proper Africa. The Consul General emphasized that his country is committed to this partnership through Prosper Africa, which brings together various U.S. government agencies to boost trade between Africa and the world's biggest economy.
We're hosting an incredible conference with our partners from Prosper Africa, the U.S. Trade Representative, and USAID on helping Nigerian exporters, small and medium enterprises, export under AGOA, the African Growth and Opportunities Act. AGOA is a unilateral trade concession that the United States gives to over 45 African nations to export their goods, over 6,800 types of goods, to the United States duty-free. So any of those products can come into the U.S. duty-free. And what we want to see is Nigeria diversify their exports under AGOA. The United States and Nigeria have a very kind of equal, balanced trade relationship. It's almost $10 billion a year, about $5 billion from the United States to Nigeria and $5 billion from Nigeria to the United States. But $3.8 billion of that is under AGOA is oil-related products, and we want to see more.
All right, to our first conversation now. See, Nigeria, Africa's largest economy, presents a lucrative opportunity for investors in the tea market. With a growing population, increasing demand for specialty teas, and a thriving middle class, the Nigerian tea market is ripe for expansion. But despite being a significant consumer of tea, Nigeria relies heavily on imports, creating a gap for local production and processing. Well, let's explore opportunities, challenges, and potential returns on investments in Nigeria's tea market. Joining me for this conversation, we have Dr. Teju Bolujoko, the chairman, Master Tea, joining me right here in the studio. It's great to have you.
Thank you very much.
Yeah, so looking at what Sir Will Stevens said there, definitely Nigeria trades with America, but we're not taking full advantage of that, AGOA trade pact, because at the end of the day, it's more of oil that keeps flowing, through that trade pact. But other commodities, that we're blessed with are not, getting the attention when it comes to export. So talk to me about where we are, right now in AGOA, and what you think we should be doing right now to take full advantage of that trade pact.
Well, thank you very much for having me. AGOA is an opportunity for Nigeria, which Nigeria has not actually used. If we have been talking about tea, Nigeria produces about 1,600 tons of tea, compared with Kenya that produces about 440.
That's massive, 443,000
yes.
tons.
There is no reason why Nigeria cannot produce as much as Kenya does, because we have the facility, we have the land, we have the air, we have the sun, we have the water, we have everything. But the real challenge actually is for that if you look at Nigerian tea, if you look at Mambila, you find out that the tea in Mambila is very low in caffeine, just like our tea. In Master Tea, it's very low in caffeine, because that is the way in which the cultivars were chosen. And we have the best tea in the world, but we are not taking advantage of that.
Because I'm wondering, last time I was in Kenya, when I got back from Kenya, the first thing I was asked is, did you bring me Kenyan tea? And I'm like, what is Kenya doing that we're not doing? What comparative advantage do they have, over us in production of tea? We also see the likes of Malawi, 31,000 tons. That's what they exported. Zimbabwe exporting about 11,000. We're just working with production about 1,600 tons. Yes. So what can we do, at this time to actually tap into this market?
We need to look at the policies. Policies drives business. Government does not have business in doing business, but they have to have the policies that will drive business. The policies, if you look at, for example, the issue of logistics, you have spoken about AGOA. If you are sending product from Nigeria, it's about 4 times the cost of sending the same product from Kenya, from Ghana, our neighbor here. And these costs are inherent costs that we are going to the same market. We are selling in the same market. And as such, it is very important for interactions of policies of government with SMEs and the cost of things to be looked into again to ensure that Nigeria is comparable with other countries. I mentioned also the fact that we have as a company, we were in quite a number of exhibitions in Europe, and there are Kenya teas that are on the same exhibition with us. They're all certified. They have all the certification that Europe wants. And if we in Nigeria are going to be certified like that, the cost of it is so high. And we were asking our neighbors, why is it, how do you get this certification? Oh, they say that certification is the least of the things we probably will have, because government has put in place a system that enables certification to take place at a low cost. And these are all the things that we need to look into. Another thing that is very important for SMEs is the issue of background checks. If you go to Europe, somebody that has messed up in one company, going to another company, they will say, okay, if you want to even rent a house, they say, where's your permit? You go and check from government how he has behaved in the last place where he worked. And these are all things that are very important if we are going to rise up to the challenges that we have. I want to say another thing. Another thing is the fact that we have been talking about Africa Trade Union. In South Africa, and this played to us, the shops were told that, look, you have to have about 70% or 75% of products made in South Africa. Hotels were told. But here in Nigeria, we have an open policy. Open policy that does not allow for SMEs to thrive.
So is it time for us to start exploring protectionism at this point? Full on?
Full on, yes. There is no country in the world that does not protect its own people, its own businesses. If you look at the trade relations between America and China, it's all about what exactly how do I protect my own? And we ought to be looking at how the SME can be protected, because we have the challenges that we have. We have the issues that we have. But then if government says, well, we know we have signed this and we are just leaving you to the world, it doesn't really help.
Right, and we're at a time where we're also trying to battle sky-high inflation, and we've seen the central bank having to raise rates multiple times. We've seen rates get higher than 20%, at this point. And definitely, if you're going for the real rates, you're talking over 30%, when you go to the banks. So talk to me about cost of credit. What's your experience when it comes to getting credit, to fund your business?
Well, actually, we're an SME. There is no way, current rate from the central bank is 27.25. By the time it gets to the local banks, it goes higher. We don't do a business that can be able to pay.
So I'm sure you're not even looking to the banks.
No, we're not. We're not. We can't. Because we don't do a business that will pay us 40% and all that. That's not the sort of business we're in. And as such, if you cannot have that sort of returns, then you don't go to the banks. And then the other issue is the fact that who are the people that are getting this money at 35% interest rates? If I'm exporting, if I'm importing, I bring it in, I sell it immediately, and within a short time, I have the money to pay back. And so that is what our banks are doing. Our banks are not looking at SMEs. They are not supporting SMEs the way they should support. If they want to support SMEs, how will they support it? Are they going to come to the SME and say, well, we are going to give you at a very, very low rate? No, because they get their money, the way they get their money, they have to, And
it's quite interesting, when you look at the results from most of the banks, we're seeing bumper results at this point coming from, Nigerian banks, and no pun intended, really, but I'm sure there's some, entrepreneurs, watching right now, some investors on the sideline. I'm trying to imagine what opportunities lie in this tea market, at this point. What would you say are those interesting points some investors can pile money into in this market?
I would say that production is one area that we must invite investors and have policies that will help investors to be able to promote. If we are not encouraging local investors, there is no way external investors will come. Local investors must be encouraged. Our farmers must be encouraged. The people that want to have the resources to be able to invest must be encouraged. Encouraged in the sense that we have spoken about logistics, and there must be a relationship that we are understanding between, take for example, the cost of diesel and fuel, and the cost of transport, and the cost of production, and the cost of materials. There is a connection, and we must always look at whatever government policies we have, how are they affecting this area of development. We need to, agriculture is one thing that indeed we need to put a lot of emphasis and effort on. But the question is, what are the issues today with agriculture, large-scale agriculture? We have the issue of security and all that and all that. So those are all issues that government must sit down and see how they interlink and relate with all the areas that we want. We want investors to come in, let the local investors be happy. Then investors will come in.
So make local investors happy before you go out there and get the foreign investors departing more. Thank you so much. It was great having you, Dr. Teju Bolujoko, is the chairman, Master T. Thank you for sharing your experience with us.
Thank you.
All right, we'll take a break now. When we come back, another interesting conversation. How are your bank apps working? We'll find out in a moment. Just stay with us. The Nigerian banking industry is undergoing a critical technological overhaul, with leading banks replacing their legacy core banking systems. Customers have complained about service disruptions for a couple of weeks now, but will services be restored fully soon? Join us for this conversation. We have Mr. Adedeji Olowe as the founder, Lend Square, joining me via Zoom. Great to have you on the show.
Hi, Daddy. Good to see you again.
It's great to see you. It's great to see you too. It's been quite a while. But I know you know what's happening, with most of these banks right now in Nigeria, undergoing they took this decision to switch their core banking applications, and most of them are doing it at the same time. Are we safe? Why are they making this move all at the same time?
Thanks so much for that question, Daddy. So here's the thing, banks are like what? Most of the banks we have today, many of them we used to call them new generation banks, like about 10, 20 years ago. All of them have been growing almost at the same pace. So you will see that those changes in terms of upgrade to core banking tend to happen almost around the same time. And why are they seeing happening? You can see the central bank has seen them to increase their capital base. Banks are getting bigger. With this new capital being raised, and with the way the world is evolving, right, with the rise of digital technology, you can see that everybody is preparing for the future growth. And the best time to do it, maybe yesterday, maybe the next best time is to do it is now. So if you've got to raise $500 billion, you can't start telling people in a couple of years' time that you are not able to process millions of transactions a day. So I will expect that this will be the best time they can do it, based on the realities as the world is evolving.
What would you say are those, technical challenges, associated with switching, core banking applications? And do you think the banks are doing enough to, address most of these challenges?
Okay, so people have asked me this question before, and I used to tell people, like, look, there are two ways to look at this thing. There is core banking upgrade, which is when you improve what you currently have, and then there's a core banking switch. Now, a core banking upgrade is, in the simplest system, is doing a surgery, right? This is very destructive because you have to practically stop everything you're doing to make sure what you have is now better than before. Now, even though it might be the same thing, usually there's a lot of things that you have to change to meet new realities. Now, core banking change itself, that is like total heart transplant. You are changing everything completely. So could there have been other ways to do it? Yes, I feel like we could do some things better, but to be very frank, it's just like if somebody goes to the hospital to do heart transplant, heart change, they might get back to work in some time, but it can't be the next day. So there is always going to be challenges. Now, but where I feel that banks could have done this better is to actually be very open to their customers, what they're trying to do, and what kind of impact it will have. I think this is where most of the banks have failed.
And it's quite interesting, Nigerians are still recovering, from the Naira redesign policy, and when people could not really access cash, and we now had to rely, we couldn't even access the apps, at some point, we now had to rely on the fintechs. So talk to me about the fintechs. Do they also have to do some kind of upgrade, at some point, or are they fine?
Well, that is going to be high for them in the future. When you look at the typical bank today compared to a fintech, banks are significantly way bigger, apart from few fintechs that process things at very large scale. That's number one. But then fintechs may also have a few bit of advantage over banks because the structure and manner of their technology is a little bit different. So usually most banks use monolithic, we call them monolithic application. These are very big applications that run on mainframes that are very expensive. You can only do major changes to them. But for fintechs, they run on simpler technology. Well, it's simpler because it looks simple, but it's simpler because it's also better, right? We call them things like microservices that allow you to have sometimes what we call horizontal scaling. It means that as you have more transactions coming to you, you could just spread your services this way. Unlike banks that have to spread their services in a vertical manner. Now, spreading in a vertical manner is usually more expensive and disruptive, but for horizontal scaling, it's a whole lot easier. But nevertheless, when the current crop of fintechs we have in Nigeria also grow to that kind of scale, they will definitely always have to do some upgrade as well, and it may impact people. Now, if I may add, if you're a big bank, if something's happening to your system, it gets to impact more people because you have more customers who may not be able to receive money sent to them or who may not be able to easily send money. But if you're a smaller bank or a smaller fintech, even when you have protracted challenges, a lot of people may not know because most people don't use you. So if you look at Nigeria today and you look at it like Pareto's rule, you can say that the top 5 banks control like almost 60-70% of banking industry. So it means that if anything is happening to them, the impact on the entire Nigeria in itself and the kind of noise and complaint that come up will be significantly.
Right, and we did hear the EFCC chairman, I think that was yesterday, talk about potential losses due to cyber insecurity. With this whole process, this whole switching and upgrade process, are there potential cybersecurity risks that consumers or customers should actually be aware of and maybe protect themselves from with this process?
Absolutely. So, when you look at in the issue of cybersecurity, social engineering is a bigger risk from that whole cybersecurity suite of risk. Why? Because take, for example, a bank is doing an upgrade or a bank has an issue, people are sending money to customers, it's not impacting on time. Fraudsters who send SMS and email to people and say, oh, you send money to somebody, he hasn't gotten there, click this link to register your issue. And that would be a problem. Now, what could banks do to do this? It's a communication. Banks need to be open, banks need to respect their customers, banks need to be very clear on what the issues are and when they're coming back, right? If this is well done, it will happen. Now, during this time of upgrade, I've seen different banks handle this thing differently. Some banks, right, because I get to have accounts in almost every bank based on the kind of work I do. Some banks were communicating clearly, okay, we are doing this, we are back, we are yet to come back. Some banks just kept mum and you have no idea about what's happening. Now, when a bank doesn't speak to their customers, it's easy for bad actors to start speaking to their customers on their behalf.
Yeah, definitely. Cybersecurity, a big issue. I'm tired of, most of these hackers always trying to take over my WhatsApp at some point. They always keep trying. It's so frustrating. But are there any international benchmarks or standards that, Nigerian banks are adhering to, during this whole transition?
Interestingly, when you go globally, right, a lot of banks have done upgrade without issues. Some banks have also done upgrade that have caused a lot of issues, especially some of the British banks, like TSB Lloyds. For us, I feel like Nigerian banks should elevate themselves to a level where even if others have not done it well internationally, we should be the example. So we should elevate ourselves to a level where When people go to Harvard, they talk about the upgrade done by a Nigerian bank, why that should be a masterclass in the upgrade. I think that kind of thinking is what should be permeate our thoughts, our mind in the Nigerian banking ecosystem.
All right, so, going into 2025, what do you see? And do you see better customer experience for, most of these customers, or are we seeing more upgrades into 2025?
For the banks that haven't done upgrades right now, it's still going to come to them. Because once you raise money, literally you have to do an upgrade. Why? Because you have to justify that money you raised, which means that you have to have better technology to be able to handle larger number of customers. But one thing we have to do is we have to separate the concept of customer service from technology. Technology is an enabler to allow you to serve your customer better. But if you don't respect your customers to start with, and if you do not care about how your customers think when you have issues, even if you have the best technology in the world, it's not going to help. Now, if you have basic technology, but you care about your customers, then they will enjoy you even when you haven't done an upgrade. So my challenge for banks is that this upgrade may mean that some transactions could be faster. But if a bank doesn't usually respond to customers, if a bank doesn't usually send emails to customers or SMS to customers when there are issues or when they are working on anything, that upgrade is not going to send emails on their behalf. So that thinking of caring about customers, and after all, we just left this customer service week, that thinking should permeate our thoughts and let banks start winning based on quality of customer service. Because just after consolidation, like about a decade ago, or 15 years ago, a lot of banking improved. But over the last 2-3 years, maybe for the last 4 years, quality of customer service has kind of reduced significantly. You send emails to bank, you don't get answers, you have issues, it doesn't get resolved on time. So this has nothing to do with technology at all. It's got to do with, management executives have to step forward and think of their customers, respect their customers, and take care of them. Right,
because we see a lot of customers going on X, tagging some of these banks and reporting the cases there.
It's quite tiring.
It is. Thank you so much, Adedeji Lowe, founder, Lens Square. It was great having you today. Thank you.
Good to have you as well, Daddy.
All righty, that's the show today. The markets are open right now. We'll give you a summary of what's happening at intraday. That's at 1 p.m. on Business Incorporated. Then we'll give you a total summary at News at 10. Thank you for watching. I'm Ladi Williams. I hand things back over to the Sunrise Daily team.